to the quick preview of today's US September PC report, set to be released at 30 Eastern Time, at 12:30 GMT. So just roughly about an hour from this recording. Before we dive into the expectations and estimates, let me take a moment to introduce myself. For those of you who are new here, my name is Harry, and here at LiveSquawk we provide professional traders and investors with up to the second audio news through our live service. If you'd like to try out the Squawk for yourself, head over to livesquawk.com and take advantage of our free trial offer. Okay, back to today's release. And really just want to give you an idea of what the markets are looking for ahead of today's PCE data. Just to note then, personal income, I'll just read out the consensus estimates here. Personal income for August expected up 0.4% from 0.3%, with personal spending seen at 0.3% from 0.5% last time out. Real personal spending expected to rise by 0.1%, softer than the 0.4% seen in July. PCE price index on the month seen up 0.1%, a tenth below last month's 0.2%. On the year, that puts a 2.3% year-over-year print. That would take it down 0.2 from 2.5% last time out. On the core measures, core PCE price index for August on the month-over-month seen up 0.2%, in line with previous. Year-over-year seen at 2.7, up from 2.6 last. So there we have it. Those are the estimates for today's readings. We'll take a look now really at what some of the bank desks are looking for from the numbers and what their expectations are. Just also note, I have put up there for those who want to look at it, the current Fed projections from the September SEP for anyone interested in and just seeing what the Fed are currently projecting for this year and next, the medium forecast for core PC in particular, because it's the favored Fed measure of inflation over the core CPI print. So core PCE, as the September projections have stated, is looking for 2.6% for 2024. That's down 0.2 from 2.8% seen in the June projections. For 2025, they're looking for 2.2%, down a tenth from 2.3% seen last time out. But further out, they've kept them pretty much the same. For 2026, 2% is the expected target, with 2% for 2027, the new forecast that comes in there. Right, now turning to some of the bank desks and what they're looking for from today. If I start with Bank of America Global Research, they say PCE will confirm gradual disinflation despite base effects. We forecast a strong 0.6% month-over-month increase in personal income in August. Personal spending is likely to come in at a modest 0.2%, raising the saving rate. We expect core PCE to print at 0.15 month-over-month in August, although this would raise PCE to 2.7% year-over-year due to base effects. Our baseline remains one of further gradual disinflation, however. Now moving on to Daiwa Capital Markets. They say the data highlight in the US will be the August personal income, personal spending report this Friday, which includes the PCE deflators, another name for the PCE price index, really, which are likely to show that prices rose a modest 0.1% on the month to leave the annual headline rate down to 2.2% year-over-year, which will be the softest since February of 2021. The Fed's preferred core PCE deflator is expected to be better behaved than core CPI, rising just 0.2% month-over-month, albeit edging very slightly higher on the annual rate to 2.7% year-over-year. ING said we expect US core PCE at a consensus 0.2% today, which should endorse the Fed's shift in focus from inflation to unemployment and growth. The market impact should be limited, and the next move in the dollar may well have to wait for jobs figures next week. Turning to SocGen's Albert Edwards, he makes an interesting point about part of the PC report that doesn't often get top billing. He says this year has seen something highly unusual driving consumer spending. namely an unusually deep decline in the personal sector savings rate below 3%, something only previously seen on a sustained basis in the giddy days of misguided euphoria in 2005 to 2007, prior to the 2008 global financial crisis. The US personal sector savings rate is released as part of the BEA, Bureau of Economic Analysis, monthly personal income and outlays report. In the past few years, that release has attracted close market scrutiny because it contains the personal consumption expenditure, or PCE, deflator measure of inflation, especially as the core PCE deflator is the Fed's official inflation target, not corporate CPI. But attention may be about to switch from core PCE as the most important part of this data release to the savings rate. The history suggests that when the savings rate sinks this low, it usually proves unsustainable, with a subsequent rise triggering a recession. So they're just a bit of a cross section of some of the reports that we've seen and digested ahead of today's PCE reading. As I said, the data comes out at 8:30 Eastern Time, 12:30 GMT. I'll just give you a quick recap of what the market analysts and experts are expecting, the consensus view. So the estimate for personal income for August then seen up 0.4 versus 0.3. Personal spending seen at 0.3 from 0.5. Real personal spending expected to come in at 0.1 from 0.4%. Moving on to the price indicators, the PCE price index on the month is forecast at 0.1%, down from 0.2, with the year-over-year peg to come in at 2.3%, 0.2 below 2.5 last time out. On the core measure, the core PCE price index from the month, seen up 0.2%, which would be the same as last month, with the year-over-year at 2.7, rising slightly from 2.6 previously. We'll also get the bottoming out in terms of US data, advanced goods trade balance, and wholesale inventories and retail inventories data out as well. Prelim reading for the wholesale inventories will release, but again, it's secondary data when you compare it to what we're looking at in terms of this PCE measure. Listen, thank you for listening. As I said, this was just to give you just something to look out for and digest ahead of today's PCE report. We don't think it's going to be that much of a market mover because of what we saw last week. Only last week we only had the Fed rate decision a week ago. And also note that officials have come out and said that really they're looking more at the labour, the market and economic activity as a whole, as opposed to simply just inflation, which they think they've got a handle on to a large degree, really to lead their monetary policy narrative, really. So in that sense, again, today's number is important as always, but isn't quite as integral to Fed thinking, we think, at the moment, as we've seen in recent months, or what the experts think in recent months. But again, on an intraday could produce some volatility and activity, but we think it will very quickly dissipate in favour of next week's non-farm payroll. Okay, so thank you for listening. Hopefully this is helpful. As I said, go to livesquawk.com, take up a trial. If you think it's something that you'd find useful in your trading day, we think it's invaluable, but we would. But our audience think it's invaluable. We've been around for a long time and been doing this for a long time. Yeah, hopefully you'll find it of some use. And we'll be back in the near future with more of these previews of big events and key data for you to enjoy and hopefully soon partake in. Have a good day, have a good weekend, and thank you for listening.